Hello and welcome back to Stock Market Weekly. How's everybody doing out there? It's week number 2 of a correction. Is it a correction yet? It hasn't quite hit 10%. We got close in the Nasdaq 100. We're about 9% down, but it's been bumpy out there the last couple of weeks. Hopefully everyone made it through okay. I am your host, Evan Medeiros. This is the show where we break down everything that's happening across financial markets through the lens of technical analysis. Let's get into it here. Nasdaq 100 in that 9% pullback mode. We're going to look to see if we're getting towards the end of this, if there's some more room to move to the downside. We're going to talk about that in this video. We've got the third week in a row here for small cap outperformance, though. It's this rotation trade. It's not new. It's been going on now, and it continues this week with the Russell 2000 being the best spot to be this week. Nasdaq Vol did hit 1-year highs, give or take. Not exactly, but pretty much at 1-year highs for Nasdaq Volatility. We also had Ethereum ETFs start trading this week, and we have the big heavyweights on deck this coming week: Apple, Microsoft, Amazon, Meta. We've also got the Fed on a rate policy decision, so we got lots to think about for next week. Let's get into it here with some charts. Stick around. All right, let's get into it here. We've got some charts in front of us. TC2000, that is a charting platform we're using throughout this video. It's a platform, as we always say, that we support here at the Trade Risk. So if you are a user of TC2000 or you're thinking about trying out a new trading platform, check out the goodies we have available on our website, thetraderisk.com. We've got a lot of cool downloads. You can work with me to build something custom if you don't see what you're looking for on our website. So let's get into the numbers here and take a look at some of this action. So Dow Jones, Russell 2000, those were the bright spots to be this week. We had the Dow was up 0.76%, so pretty respectable. The Russell 2000, though, still blowing everything out of the water here, 3.39%, adding to this surge that it's seen over the last 3 weeks. Nasdaq 100 continues to see rotation outflows, and the S&P 500 minus 0.82%, heavy tech weighting there, makes sense. Also down this week. Take a look at the 1-month returns now. The Russell 2000 has returned 12.08% in the last 4 weeks of trading. I mean, that is average year for a good average year for the Russell 2000 is up 12%, right? So this has really moved quick to the upside, caught a lot of folks off guard, and especially with the NASDAQ correcting, I think folks are maybe looking at, well, if the NASDAQ can't hold up, there's no way the Russell 2000 can hold up, yet that relationship, that inverse relationship continues. If we take a look at volatility, we did get a good spike. We're going to take a look at volatility in the charts a little bit later, but we had NASDAQ vol almost 25 this week, I believe. And if we look at the VIX, is going out at 16.38. That's well off of the highs of the intraday week as well. Dow Jones vol is the lowest of the 3. Let's take a look at sectors here. Again, you still have a very divided market. You've got things that are working, you've got things that aren't working. Things that aren't working, mostly tech, okay? So utilities at the top of the list this week, healthcare and materials. So little defensive tone to what was working this week, but still, you also had a handful of other sectors that were still up 1% or 0.5% this week. As we said, consumer discretionary, technology, and communication services still getting hit the hardest here, 1 to 2% to the downside, and so that outflows out of technology really continues here. Now, when we take a look at our trends of the market, right, even though I think headlines, folks are going to be looking at, okay, S&P's down again, NASDAQ's down again, but when we look underneath the hood and we get a little more granular, we're seeing sectors here, probably the most amount of sectors we've seen just looking at our trend filter here. This is a custom smart trend filter we built, but we're getting lots of green dots like financials, like biotech, like healthcare, like utilities, like staples, materials trying to turn up as well, real estate up, industrials kind of about to turn up or neutral to bullish. So you're getting a lot more breadth, a wider sort of area in the market to cast your net and to find stocks that are working, like we talked about the last 2 weeks, this is the environment for stock pickers. This is finally where it's not just the top 50 companies that are really fueling the gains. It is now the other 90% that are starting to do a lot of work here to the upside. Now, if we take this to market breadth, we see more of the same. If we look at our favorite measure here, which is really simply just 52-week highs and 52-week lows, the number of stocks hitting those highs or lows, we continue to see an outpace here of stocks hitting 52-week highs. We did dry up a little bit intra-week, but we finished the week strong with a nice uptick in the number of stocks hitting 52-week highs. And this ratio continues to show support here underneath the market hood, that money really isn't leaving the stock market. We're just seeing money rotate out of those big, large year-to-date winner mega cap technologies and into lots of other areas of the stock market. Now, next up here is Investors Business Daily. So shout out to them. They are a sponsor of the show. So thank you, IBD. This is their top 10 in their IBD 50 list. Not sure if I updated it this week, but we've got some winners, got some losers in here. Still a tough list for growth and technology out there because, as we talked about, that is the spot that is a bit painful right now. So you do have to pick your spots and pick your winners, but punishment fits the crime. If you're going for those high beta names and you want those big returns, those stocks that move quite a bit, then you have to be able to risk manage here. So IBD, check it out. Link in the description of this video. Get access to their digital subscription. Now, moving on to commodities here, you can see that kind of a tough spot to be this week as well. We had DBA up this week. It was up 1%. If we look at Bitcoin, this held in there, up 1% this week. That was encouraging to see. And everything else was pretty much down. The dollar didn't do a whole lot this week. It was basically flat. But we had oil down. We had copper down, silver down, natural gas down, gold was down. So it was a little bit tough in commodity land, even though the dollar didn't move a whole lot. Now, if we go over to yields, we did see an encouraging move later in the week. We did get some economic data out, but we started to see yields roll over, kind of helping the equity case a little bit. You can see we got this series of lower highs and lower lows still in place. We're not quite at cycle lows for, say, the 10-year Treasury yield, but we're back around 4.2, I believe, and looking like we're on the way down. So that is all of our data. Let's get into some individual charts here. And if we take a look here at the S&P 500 first and foremost, this is what the weekly chart is now looking like. We've got our second week down in a row. We've got our second higher volume week down in a row. And we did close a little bit off of the lows. So we closed around 54.59. We made it all the way down to basically 53.90. And that gives us an approximate for the S&P 500 5% pullback. Okay, so pretty mild, all things considered. Still haven't got to the magnitude of the drawdown from the March-April correction here in the S&P 500. It's been 2 weeks. We've, chopped around a little bit. We started the week up. We had a nice little bounce to start this week. And then it was really Wednesday's session that sort of cascaded us lower. We got our first series of earnings announcements out. We're going to talk about those a little bit later, which perhaps, really kind of tipped the market into maybe getting into a sell quickly mode going into earnings season. But we still look like we're in a corrective state. It is hard to say that this looks entirely over. It is a nice shakeout. It is a nice move lower. We've had a pretty strong year, as we talked about last year. I won't go back. As we talked about last video, I won't go into all of the details here, but it's been a pretty smooth ride for 2024. So a little bit of turbulence here makes some sense. We had, again, earnings season coming up. We've got elections later on this year. We've had a very calm period in markets. So a little bit of profit taking here, some normal ebbs and flows, some normal jitters out of the market. We've got Fed next week as well. It makes sense to perhaps take some chips off the table and just kind of look around, reassess before we get into some of these other big catalysts. When we look at these corrective states, when we risk manage these corrective states, I always like to say, let's at least start with a day that takes out the prior day high, right? If we're looking for evidence to say, okay, is this correction done, or are the buyers starting to get, regain some control here? I always like to look to see if we can finally close above a prior day's highs. Right now, we've got two nice wicks around 54.90. I'd say that's a good first start. If the market next week can start getting back over 54.90 on a closing basis, can start putting in some higher lows on those lower time frames on a 15, 30, 60-minute chart, then you start to get some evidence that things are cooling off a little bit. When we look at the kind of bear flag that formed into last week and the start of this week, it was something that we sort of talked about though, right? Last week, we kind of game planned that, you know what, it looks like we were a little bit oversold in the short term. Maybe we get a small bounce and then we continue down this path, because really it was the weekly chart that sort of tipped us off that this doesn't quite look, speaking of last week's bar, this doesn't quite look like a one and done type of bar. This looks like a bar that has maybe a little bit of more momentum to it. And so we're seeing that momentum kind of pick up here. And so I think, you know, as we go into some of this heavyweights next week, when we start to look at some of the company earnings and the reports and the guidance, we're going to start to put a better picture together on how the market is really game planning for the rest of this year. So I still think it's a spot where you want to be doing your homework, looking for your individual stocks that are setting up, that are leading, that are acting better, that are putting in some higher bases. I still think that is a glass half full approach to the market right now. And that's what I'm continuing to do, is to look at this as opportunistically on the long side to get into some good positions into perhaps a year-end run. I know we're not anywhere near year end at this point. We have hurdles in between that. But I think for those longer term outlooks, those longer term kind of position trades, I think this shakeout is still looking pretty healthy. Okay. Not saying we're done. I still think that the S&P 500 could come back down to approximately these May highs here, this consolidation zone, call it 5,300, 5,350 or so. I think that'd be entirely reasonable. But I'd say we're in the vicinity here where it's time to start, you know, sharpening down the pencil. I'd say, you know, barring some other, you know, exogenous events that hit this market, I think this, you know, this circle here probably represents where this pullback makes some sense to me. I've been game planning it on the Nasdaq 100, which was about a 9% correction. And I would say, you know, I was tweeting this out, or actually I think on Stock Twits, going back and forth with some users this week, but, you know, 8 to 12%, 9 to 12% correction, getting back down to these March highs, April highs down here around 445, 446, maybe retest the May low right here, this pivot low around 443. This feels like we're in the right area of some type of kind of ordinary standard and still be a healthy correction in the stock market, barring some other events, right? If something changes drastically with, you know, Microsoft, Amazon, Meta, Apple next week, they all bomb earnings and they, you know, totally do a 180 on their AI spend or plan, that would change things, right? That would certainly change the longer term picture. There'd be new information. If the Fed suddenly gets extremely hawkish, right? Or we have some other events, then yes, obviously the roadmap here, the expectations on what the market is going to do will change in my mind. But barring any of those extreme events, I would say, you know, some type of landing in here feels right to me. Okay. So that's what I'm going to be looking for. That's my current projection. And I will certainly update this as the weeks go on. I'd say we're at the upper end of a very shallow correction. As we kind of see it, doesn't feel done to me quite yet. There's been some high volume days. We have an inside session here on Friday. Volume was a little below average. Didn't feel all that convincing that the bottom is in, but we're starting to stabilize. And I think the market's just really going to be waiting for next week. So let's see what we get next week. Let's continue to manage risk. If we throw on some Bollinger Bands here on the daily chart, you can see that Thursday we definitely undercut, did some damage and kind of, you know, got some people out, flushed some folks out. And I think that's good. I think flushing out some of that frothy sentiment where it's just such an easy up-only market is par for the course. And I think this sets up opportunities on the other side. So let's continue to manage risk. Let's pick our spots. Let's curate our stocks. Let's, you know, do the whole thing as traders and continue to manage this correction as, you know, responsibly as we can. Russell 2000, entirely different, right? So this is almost looking like an entirely different market. We saw advancement this week. We were up 3.4%. It's the third week in a row that we've been clawing higher here, and we're building. Let me take off these Bollinger Bands. we're building a nice upper level base here. So we've got this nice kind of accumulation or some higher low that's getting put in right around this 217 area. So that's some of that rotation we saw across other sectors. We're going to look at some sectors a little bit later, but this looks pretty darn good. Closing right here at the highs. Look at the volume. Look at this volume that is coming in here over the past handful of sessions. This is a pretty extraordinary pickup in volume. These are points to take notice because there is clear, activity occurring here in this index. Okay. And you can go down to individual stocks and subsectors and industries a little more granularly. So pay attention to this. I still think the Russell 2000 is looking good here. It's looking actionable. It feels like there's some legs in this, and it feels like it could start to leg up again. I don't buy the fact that the Nasdaq 100 has to go up for the Russell to go up. I think you can see this decoupling right now, and it's playing out in real time, right? So we'll see. Obviously, you don't want to see all the heavyweights just continue to get, taken out behind back and be in fierce downtrends. But it feels like the Russell 2000 is at least proving right now that it can stand alone without them. So that's kind of the read there for the Russell. If we zoom out, and we take that bigger picture look, it feels like the Russell 2000 wants to get back up to these prior highs, up to 2021. Now, not anytime soon, but as we look at this big breakout and we look at the volume coming in here, I don't know, end of year going up to 240, is that some type of longer term target for the Russell 2000? It seems reasonable to me to get back up here, especially after how much sideways this has put in for the last 2.5 years, right? It's not going to happen in a straight line. There'll be bumps. There'll be volatility in between, but it feels like it's on the path forward to get back up to these old 2021 highs. So that's about it. That's two predictions, and I don't really make predictions. We're just game planning open-minded targets of where things can go if trends continue. But that is a logical spot for the Russell 2000 to kind of get back up, test, and kind of maybe chill out up there, right? So that's the way I'm looking at things. Let's take a look at some individuals. Actually, no, I want to look at volatility first. So if we take a look at the VIX got up to as high as 19.36 on Thursday. So we didn't get quite up to 20. We peeled off 3 points into the weekly close here, but we certainly got a good, that's a good push of fear in here for the market, right? The market was a little bit on edge, especially intraday on Thursday as things were cascading lower, particularly in the Nasdaq. But that's a nice number there to kind of rattle the cages a little bit. The Nasdaq Volatility Index got almost to 25. And again, that was good for pretty much a year high for VXN. So I wouldn't be surprised if that was the high for volatility on this spike. But I still think the Qs could drift lower. But it feels like that could have been a little bit of a short-term capitulation high here for Nasdaq Vol. We'll see. But I still, again, think that the Qs could drift lower here without making a new high in vol. We'll see how that goes. Now, let's talk about, let's move to Bitcoin real quick here. So IBIT, again, we talked about kind of the bull case last week as we saw just a lot of resurgence here, a lot of momentum kind of push back into the Bitcoin trade. And if we look at the weekly performance here, Bitcoin was up 1% this week. And so again, you think about the fear that came into the Nasdaq and the S&P 500. Bitcoin seems to be more, correlating here with Russell 2000 and that type of risk on trade or sensitivity to perhaps interest rates. There was a good range this week. I mean, IBIT got almost down to last week's lows, but buyers kind of came back in, drove it up and closed it at the highs. Of course, we've got more, we had the Ethereum ETF get approved, which we'll look at in just a moment. We had the Bitcoin conference going on, I guess, as I speak, and this weekend. And so there's still some, still lots of activity underneath the hood here for Bitcoin, but continues to look good and continue to think that this is a market that is going to do well here in the medium term. So let's take a quick look at the Ethereum ETFs. So we had a round of sort of debut here for Ethereum ETFs this week, and we can see that Grayscale, the ETHE Ethereum Trust. This was kind of like GBTC. This was the game in town here for Ethereum exposure prior to this week, and this had the higher fees. You're seeing the same dynamics play out here that we saw in the Bitcoin ETFs, where there was a exodus or rotation out of GBTC because its fees were 7 times higher than the new ETFs that came to market. So you're seeing the outflows kind of pour in here. Take a look at the volume that came in this week for the Ethereum Trust. But now take a look at BlackRock's or iShares ETHA, their new ETF. Again, heavy volume. They seem to be benefiting the most from the flows. You can see from a dollar volume perspective, they tend to be dominating here in terms of flows. Grayscale also, though, has their Ethereum Mini, which is just the ticker symbol ETH. Period. ETH. And so, you know, you're going to get basically ETH and then probably iShares, BlackRock's ETHA to be the dominant players here for your Ether exposure down this week, and we'll see how this progresses as time goes on. But our second cryptocurrency with ETFs now are live, and we're going to move on quickly here to round out this video because we're already going pretty long to some of those big reports this week. We had Google reporting on Wednesday, and certainly market not giving the greatest response to it. The report itself, I think, was generally, the numbers were pretty much in line, but we still had a 5% down session here on Google, and this pullback really does continue. We saw the same in Tesla, also a little bit worse here. We had a 12% reaction to the downside. And again, market reaction on these two big heavyweights kind of setting the tone, helping fuel perhaps some of that uncertainty and some of the Nasdaq unwind, the selling that we saw. The good news is that when we take a look here at Apple, for instance, next week now, we are down 10% in this stock. So a lot of the maybe frothy expectations, the hot money or the bullish excitement is probably out of the stock. Doesn't mean it can't go lower, but it means that at least we're probably at a more reset kind of even keel response or market price, I should say, going into the report. Same for Microsoft, because we also have Microsoft out. This is now down 10% going into its earnings report. That's much better from a health perspective, say, than going into that earnings report at all-time highs with lots of excitement and anticipation about what they're going to say. So it looks like the market's kind of going into some of these reports now with a little more realism. Same thing with Meta. It's in a pullback right now. Amazon in a little bit of a pullback. So I think, you know, we're kind of setting the bar and setting the tone a little bit. Maybe, again, getting towards the end of this pullback or this correction. Still think we could get that knee-jerk reaction down, generally speaking, but not as bad, or maybe more stagnant and sideways. So that's what's coming next week. Again, we also have the Fed next week. We had some other earnings names, which we didn't get to. We had ServiceNow, which was bullish, breaking out this week. We had UPS breaking down this week on some big moves. And then we had MMM, Triple M, 3M breaking out heavy. So we've had in this earnings season some pretty sizable moves, both up and down, and the market is really sort of, you know, queuing and giving that individual stock attention and sort of decoupling to the index and really paying attention to what these companies are saying. So again, I think it's a stock picker's market. I think this is where, you know, you can really find as a trader those opportunities as money rotates in these individual stocks and sectors. So that's what I have for this week. Hopefully, again, you're managing the pullback okay. We got a busy week. Double check those earnings dates on all of your holdings. And I hope this video was helpful. We've got links in the description of the video. Check out the trading systems we have available, the other services we have available, TC2000, and our sponsor, IBIT. Everything in the description of this video. So thanks so much. We'll see you back here next weekend. Take care and have a great weekend.